Hey everybody, how's it going tonight? So today I'm going to walk you guys through a mistake, or not really a mistake, but a lesson that I learned over the past couple months or so. So basically, what I did was I sold a covered call. So I had about 200 and some shares of Realty Income Corp, which is ticker symbol O. And what I did was I sold a $65 covered call, meaning I have 200 shares, but what I would do is basically say if the stock got to a certain stock price, I would sell it at, let's say, $65, which was in this case what it was. And for you to be able to ensure that, you paid me, I think at the time it was $70 or $75 per contract. So I sold two contracts, and I kind of get more into it a little bit later. And what ended up happening is, of course, Realty Income Corp jumped up in price pretty fast. So what I'll show you guys is on the 23rd of January, I sold a $65 strike, or $65 covered call for February 15th. And generally speaking, Realty Income Corp hasn't really been getting above $65. It's been in the 64 range or below. But as soon as I sold the covered call, immediately the stock, jumps up by $5 or so. So when you think about it, 200 shares times $5, you're kind of leaving around $1,000 on the table. But hey, it is what it is. So what I ended up doing, like I mentioned, is I sold a covered call. So what it did basically was say, you give me $75 per contract, and I sold two of them, so around $100 and some dollars in total. And if by February 15th the stock is $65, you can have that stock from me, but I get to keep this $133. So what you're seeing is, of course, on the 15th of February, this stock ended up being around $65. So I had to then sell the stock for $65 a piece, which left me with a sale of about $13,000. Overall, I think I made 20% or so just on owning the Realty Income Corp shares, and I made a little bit of money on the actual cover call itself. But I probably would have rather just held on to the shares because I had 200 or so shares, and each of them was paying me about 22 cents a month. So every month, I was getting about $44 or $45 just in dividend income from my Realty Income Corp position. So in that respect, I probably am missing out on some dividend income. Currently sitting at around $14 or so $1,000 in my brokerage account, just sitting there waiting to be invested. So that's that. But what I wanted to do was maybe see if I could explain this a little bit better. So what I'm doing when I do a covered call is I am basically saying I'm going to sell you my stock if anything goes higher than, let's say, $65. And what I'll do from that is take money from you. So what I'm doing is taking the $150, which I mentioned, the $135 or what have you, to say if the stock goes to 70 or so by February 15th, which in this case it did, you can buy it from me for $65. It doesn't seem like a good deal, right? I mean, in this case, I'd made a bad trade. But had the stock gone down to $60 and I just would have continued to get the dividend on a monthly basis, I would have basically been able to attain 3 months worth of dividends, and I would have been able to keep my 200 shares of Realty Income Corp. And then I could have potentially written another contract to do the same thing. So what I effectively could have done was, if the stock went the other way and stayed at $60, I would have kept my shares, got my $130 or $135 in premiums. I would have wrote another covered call for the same amount, if not more, and basically would have gotten 6 months worth of premiums over the course of 2 or so months. rather than just the $40 in premiums. So technically, I'm not really out per se. Granted, I will have to pay taxes on the sale, on the capital gains taxes on the sale of my Realty Income Corp shares. But I wanted to kind of show you guys an example of a poor trade. In this case, for some reason, every time I sell a covered call, it never really goes in my favor. So maybe I should stop selling covered calls. But wanted to give you guys an insight as to that. And I believe there's another couple videos that I want to put out for you guys. I asked you guys, I put out a poll asking if you wanted to hear about this, 2 special dividends that I've received, and also I might be taking the money that I got from this transaction, the $12,000 or $14,000 that I have in my brokerage account, and withdrawing that and taking some money from my savings and investing in a private real estate investment trust. So if you're interested in hearing about that, I think that was the most heavily voted one. It just didn't really make sense as to how I had this decent sum of cash without explaining the covered call, if that makes sense, that I executed. But anyway, truly hope that this makes sense. So in the case, I guess what have you. So I sold 200 shares at $65 to conclude, which gives me around $13,000 plus the premium of the option itself, so $135. So I walked away from the trade with about $13,130. I am happy I have the cash. I'm not upset about it. I've been thinking about loading up on cash a little bit more. In fact, you're seeing now that cash is about 13% of my total portfolio value. In total, I'm sitting around $22,000 worth of cash, some of which is in my brokerage account, some of which is in my IRA, of which I get about 6%, almost 7% of my income from cash now, my passive income or my dividend income, just because interest rates are on the rise. I get about 2% on my cash, which is a lot better than in my money market accounts, which is a lot better than it was in the past. So it didn't really make sense to not be invested. Now that I'm invested, you know, getting pretty good money for it. Granted, 2% is about half or a little bit less than half of what I normally get in my stocks. Normally I get around 4 to 4.5%. So, you know, generally speaking, when you're looking at like energy, this is about 29%, but it's 36% of my income, if that makes sense. You know what I mean? So, what does help is it allows the other percentages in the portfolio to kind of come up. Real estate is now below 10%, which I might keep there and spread the wealth and everything, maybe healthcare, materials. Now that the business cycle is getting a little long in the tooth, maybe you know, concentrate it more on materials for the future. But yeah, that was really the only one I wanted to talk about. I have the majority of my February dividend stocks already paid out for the month. February is not going to be a very large month. It's going to be close to $400 before YouTube, probably closer to $500 with YouTube in terms of passive income. But I don't want to go too early in case, you know, I don't want to basically say, you know, exactly what the amount is without quantifying every single step. And there's one or two dividends that I've yet to pay out for the month. So anyway, thanks guys. I will be making another video right after this for upload in the next couple days. So expect another video, probably talking about maybe the private real estate investment trust that I'll be working in, or something else. What was the other one I was going to make? Anyway, it's not important. Thanks for stopping by the channel. As always, like, subscribe, comment down below if you have any questions or suggestions, and I will talk to you guys soon. Have a great night.